So guys, we're going to be reviewing scenarios where you should take options trade versus a futures trade. And it's going to come really hard to some people if you're only used to trading futures, because a lot of people do. But I think at the end of the video, you'll understand relatively why I think both instruments are important to learn. I don't think you should just trade one instrument. I think if you really incorporate both, you're going to get a bigger benefit. And this is coming from somebody for the past 3 years. I've only ever traded options. So the thing with options is that, as many may know, even though you're right on direction, if you're wrong on timing, then even though the position can go in your favor, you'll actually still lose money. And I'll show you guys what I mean. Right here, I was looking at Apple, and just to give you context of that day on Tuesday, we had a massive downtrend, extremely easy downtrend. I just wasn't looking at SPY, but back when I went to go chart it, this is what we had. You can see the same patterns repeat themselves. Now, granted, we don't get these exact easy days every day. This is like 10% of the market. Most days are more like this, like sideways action or kind of like a iffy down, right? But once in a while, you're going to get these crazy money-making opportunities. Now, I didn't capitalize on SPY. I capitalized here on Apple, but I'll show you guys the gist of SPY because I know a lot of you guys just trade the main indexes. So right here, magenta, right, we have this blue guiding us, which is a 30-minute algo, I believe. Let's go back to the macro chart. I believe this right here, so this is Monday and then a little bit of Tuesday. So we have this kind of like green precision. It kind of appeared again here. I didn't chart it, but you could argue that it's there. So that's essentially what the blue is. But you see, magenta goes down in green. Magenta doesn't go down in this green, but it goes down in a stronger green. So from there on out, since the selling actually became stronger, you no longer use this angle, you use this angle. So look, magenta, you could even chart the purple with a dual algo setup. So purple, magenta, down in the green. Purple, magenta, down in the same green, right? Purple, magenta, down in an even crazier green. At that point, we got a reversal point right here. And then I'm sure there was some call entries right here, like the break or retest of this purple should be more like pink. I like to label my colors that way. So we got a break and retest of the pink. Maybe it forms again. I'm not entirely sure. Maybe something like yeah. There's a pink forming somewhat here, but I probably wouldn't have taken that trade. Maybe a final 10 minutes bounce. Realistically, though, if you're going to take a reversal, it would have been this pink and like a retest, but I wouldn't have taken that. Now, my money maker right here on the same Tuesday, since I missed the SPY sell-off, was this Apple sell-off. We pretty much got the same algos, and it was pretty easy because pre-market we had orange is sold in the blue. Orange, it's sold in the blue. So by this point, about 10 o'clock, which is 11 o'clock New York time, I'm just looking for orange and blue. So right here, what did we get? Orange building liquidity. And you can see I'm getting to the point where I don't even need to draw all the lines. I just need to draw the dominant algorithms. So I'm only looking for orange. And then would you look at that? Blue again. Look, I'm not making it up. Orange, blue. Orange, blue. And I entered right here with a 1 to 7 risk to reward. I made about 88% on these contracts. And yeah, it was a beautiful options trade. Another thing that I like trading about Apple is I can move this a little bit. The strike price is it goes by 2.5. So the strike price would be right there at 292.5. So once you hit that strike, you're already in the money. And yeah, it was just a beautiful trade. And if you even held a runner, like I'm not sure, I don't think Apple has futures, does it? I doubt it. I think it's just like the actual stock and options, but I actually don't know that. Realistically, it's because, yes, if you had a futures contract, let's say this was SPY and you had a futures contract on MES, you could have held it down even more and like just keep the level as your stop. But again, with options, you only want the precision algorithm. Once it breaks out of this blue, you're not holding for it to go down more, because even though it's going down in your favor, theta decay is just making your contract worthless. And by the time it goes down here, you've lost so much value, it's not even worth it. So it's pretty simple. Orange, blue, the precision algorithm, and that's your trade. So 88% of my contracts right here, absolutely beautiful. Now, this is a scenario where you would take an options trade, right? And by precision algorithm, I mean the strongest seller with the steepest slope. And I'm going to give you guys an example where I actually took a MES contract, and I'm only taking 1 or 2 contracts at the time because I'm getting used to the instrument. But essentially right here, this is like where I load up with like 4, 5, 6 contracts on Apple. And then right here, let's see, it was on SPY. So you guys can see nice slope, and that's why you take options. Now, right here, what if the slope is pink? So we went from a blue slope or even a green slope. Now we're looking for puts at the rejection of this pink and magenta level. I like to call it the corners because it always bounces or rejects off corners. It's called playing the corners. Essentially, you would take puts right here at the corner of magenta and pink, and your stop is always trailing as pink. So what does that mean? It means the moment you get one or two candles in your favor, your trade is risk-free. But your trade is only risk-free and only trailing if you take this on futures. Because again, just this tiny chop right here, about 5-10 minutes, your trade is going to be red until you get the flush down. And even then, if you want to target all the way down here, you're not going to get the best price for your premium. And let's say this was earlier in the day. The reason I put it down here, right, this 1 to 30, this is like ridiculous, but it can happen. But ideally, it's just a 1 to 10. But if you want to get this 1 to 30, 90, I think, what is that, like 90 points on MES? It's unheard of, but that's why we have the algos. This would have to happen earlier in the day. We didn't have the structure for it. But look, you can see if you somehow got this of the 5-day moving average, you could get that. But ideally, let's say this happened earlier so you have time to be in your favor. How would you take this on options? You can, because it took too long to get to where you needed to go, right? And that technically went down. If you took MES contracts, look, it went down. I'll give you guys the exact level. It went down. Wow, it went down even more to where you wanted it. It went down all the way down here. If you held your runners in pink, this is literally a 1 to 46 trade. It's unheard of. This is why I'm a big proponent of the algos instead of these mechanical strategies that don't even work half the time. Because even then, right, this is the trade I took. I didn't take the 1 to 30. I took, again, because I'm only taking one contract. So by the time I'm 1 to 10, it's like I'm selling my contract. So when I took the MES contract, pink is my stop. And look, I'm never threatened. I get 1 or 2 candles in my favor. As long as it doesn't break pink, I'm never at a loss. And even when it breaks pink, I'm practically break even or even slightly in the green by like 1 or 2%. And you get this 1 to 10, you target magenta. If you had runners, like when I take 2 MES contracts, well, then you can target the purple. And then if you have more size and you want to leave a lucky runner, as long as it doesn't break pink, then you're fine. But again, this would be post-market leverage. So it's going to be like almost $3,000, $2,000, $3,000 to hold one contract post-market. So technically, if you're trading MES, you'd be fine. You'd get this crazy 1 to 30, 1 to 40 trade. Now, I only have enough for intraday leverage. I don't have a big enough account for the post market and like the nighttime market. So that's fine. Again, even if you if you catch this 1 to 10, or I guess even a 1 to 12 if you get good slippage, well, let's say you take one contract, you risk $5. Well, 5 times 12, what is that? 60? So you take 2 contracts, 120, 3 contracts, 180, right? Like you're making good pocket change, right? In the grand scheme of things, I know how I say pocket change. In reality, that's somebody's like $20 a job working 10 fucking hours just to make that 180. You know what I mean? Just with 1 or 2 contracts. So this is the scenario where you would take a futures trade instead. Now, what's the difference? Well, you can see that blue is guiding it, extremely tight slope, tight risk, lots of momentum, right? So the steeper the slope, then it's options. But you can see pink, or is it? Pink is not steep at all. Pink is a very shallow and it's very wide. So your stops have to be pink and it can take as long as it needs to, and with futures, you'll be fine. So that was just a quick rundown, and I'll show you guys. I'm not cherry picking wins. Oh, you just want to sell your course. You're cherry picking wins. No, I'll show you guys. I took a loss right here. Where was it? On Apple. I took a loss on Apple today, Friday. Where is it? Right here. Show you guys that it doesn't always work out as penny perfect as you want it to. Where is it? Okay, right here. This is the loss I took. So this is essentially what happened. I saw the green seller precision. What I should have waited is probably just waited for another precision algorithm, but it never activated. Instead, we started selling in this purple, but I still wanted to get involved, so I didn't size fully. If I see the precision algorithm, I'll size up to like 2-3%. If I see a weaker seller or a buyer, it doesn't matter whatever scenario is, we're underneath the 5-day moving average. We're selling in this purple right here. So you know what? Let me scale down to 1%. I think magenta is good enough where I can get involved, even though it's just the purple algorithm. So what did I do right here? I started seeing this pink algo, which is essentially the bulls regaining control. So how are you going to take this trade? Well, you kind of want it to break both magenta. So right here, it broke magenta and it broke the pink. So what was my risk? My risk was purple and magenta. It ended up breaking above it. I lost 1%, but this would be a 1 to 8 risk to reward with the strike price at 290. And it ended up making the nested structure, but again, I just wouldn't take this again. I guess you could technically, it could be a reload in a way, but if you didn't get the position from up here, it wouldn't make sense to reload right here. So I took the loss right here, 1%. If you saw this nested structure, I guess you could have taken, but then again, you could argue that purple barely formed. It formed just from here to here, and then it broke out. So again, the more realistic trade for me is the one I lost, which is fine. It's like I can't sit there and tell you that I would have taken these puts right here because I knew it was going to go down there. It's like, no, I predicted that it would have gone down here, and the pink just ended up taking control. There's a lot of support right here. Even though we broke pink, pink became the master in this area, and we couldn't break down in purple. Again, purple did form right here. You see these candles right here. The purple algorithm is forming, and it had a legit target, and this is why I targeted at 1 to 8, but it just didn't work in our favor. So even though I made 10%, I lost 1%. Well, we finished the week up 9%, and that's not crazy. You can make a lot more than 9%, but even on a slower week for me, even without catching the SPY selling, I was still able to make profits in the fucking market because this is what we do every day. Now, realistically, are you going to get 1 to 30 trades every day? No. Once a month? Maybe. Maybe you could get 1 to 30 trade once a month. And I know futures, it's unheard of. But this is the power of discretionary trading. Once you learn the algorithms and learn to read the tape that's ever changing every single day, you'll understand that opportunities are there every single day in the market, right? Every single day. Now, granted, this is a Friday after a big, huge week selling. It's going to be choppy. It's going to be hard to trade, right? You could technically, right? Look, blue, pink, Friday, sort of sideways in between the 20-day and the 5-day. I have this rule where I don't really take trades if we're in between moving averages. Because what are we? Because answer me the question. Well, are we bullish? Yeah, we're above the 5-day moving average. We're bullish. Well, are we bearish? We're underneath the 20-day moving average, which is stronger. So it's like, which are we? You know what I mean? You could technically range it, right? Top of the range breaks blue. Low of the range breaks pink. But again, look, this is just sideways crap. Even though there's profits, I wouldn't touch this with a 10-foot pole. So that's the lesson. Learning to incorporate futures with options. Now, I will say, if you're primarily an options trader, incorporating futures is going to be child's play. You could put a blindfold on and not care. Just understand margin, understand leverage, and you'll be fine. And again, it's less leverage than fucking options. You're pretty much just risking a 0.5 delta because MES moves $5 per point, which is 10 cents on SPY. So you can see these people risk like fucking 20-point stop losses. I'm risking what? 20 cents max, 2 points to make fucking 8. You know what I mean? It's like beautiful risk to reward with the algos. But yeah, if you're trading options, you can definitely incorporate futures. Now, if you're trading futures, it's a bit harder. It's the same analogy where as a basketball player, I just started picking up tennis. I can play tennis very easily, better than most people ever picking up a tennis ball, right? A tennis racket. I have the athleticism, the reflexes, the coordination, the super SpongeBob laxity, right, that I got from basketball. Absolutely beautiful. But if you give somebody that's only ever played tennis a basketball, well, they're gonna suck. They're gonna chuck up bricks. They're gonna be like Charles Barkley shooting a fucking 3. You know what I mean? And by the way, sports are goy slop to watch. All you people watching the FIFA World Cup, it's like, oh, let's go, Viva Mexico. It's like, bro, you're literally a goyim, and if you want to win, you gotta be Jewish like me. You gotta join the winning team like KD. Watching sports is complete goy slop. You should be learning how to trade the algos. So that's what we're gonna do here. W week, W small gain, W 9% week, and we're back, and we're going to try to read the tape better next week to avoid mistakes like these. Look, what's the mistake? Well, I stuck to my plan. I saw pink in control. I probably should have avoided this trade. The only time I should probably take it is if green appeared again, which it didn't. But I want to get involved. You take the loss, but you still take the green week. So hope this guy's like, hope this helped you out, guys. I'm fucking starting like Elon Musk. I hope this video helped you guys out. Peace.